Hello and welcome everybody back to day 7, okay, part 2. This is our last session, okay, for Southeast Asia DeFi week. We are broadcasting live from Asia Blockchain Center right in the skirts, okay, of Kuala Lumpur City, Malaysia. And we'd like to give a quick shout out, okay, to all our event and media partners who have all across Southeast Asia this time, who made Southeast Asia DeFi week possible. We've come a long stretch, okay, covered so many, okay, of the currently trending DeFi protocols. And right now, okay, we are on our very last session. We'll be featuring Maker soon. But for those who are just tuning in, okay, on day 7 on this final last session, what is DeFi? DeFi is short for decentralized finance. The simplest definition that I can give to you right now is that financial products that you can use today without intermediaries. And over the week, okay, we have covered so much of what you can do. Here are some key takeaways, okay, to help unpack all that we have covered so far. DeFi is an extension of what we can do with cryptocurrencies. With cryptocurrencies, it's pretty cool, okay? We can receive, we can send, okay, in 5 different ways, okay? Globally, openly, borderlessly, without censorship, without resistance. But as you saw in the last 7 days, and I highly encourage you to rewatch the videos as well, that DeFi allows us to do more, okay? Allows us to, thanks to interest, thanks to money Legos, okay, like interest rate markets, like decentralized exchanges where we can be part, okay, of the liquidity pools, thanks to flash loans, okay, which allows you to borrow, okay, an uncollateralized loan with the condition that if you can return it in 15 seconds. We learned, okay, of the different kind of tools like InstaDApp, okay, which allows you to combine, okay, these several things that you need to do in order to get your financial transactions done. What that all means is that DeFi offers us something that we have never seen before in the financial space. In traditional finance, very often innovation gets stuck and they don't move very smoothly because there's so many rules and restrictions and licensing requirements that prevent, okay, innovation from taking place. That is part of the reason why things are moving really fast, because a lot of DeFi projects have gained product market fit. And we are seeing, okay, due to the open source nature of it, composability is a key word here, okay, that is driving, almost on a daily basis. We are receiving updates from various kinds of DeFi projects that they're shipping out this new feature and that new feature. And when something works, it inspires people to take this item, combine this item, and create a new monster. We saw that with Yam last week. However, one of the things, you also by now realize that DeFi is, although it's trending right now, it's not an overnight success. Every single speaker, that has taken the time, to be with us, during Southeast Asia DeFi week, hardly has any sleep. It takes a lot of hard work. These protocols, have gone through lots of ups and downs, lots of testing, lots of failures to get to where they are today. And one of the reasons, that DeFi is also trending right now is because it's going through an incentivized phase. So if you heard of like yield farming and etc., what basically is happening is that when they have created something useful like Compound or Aave, they to further decentralize their what they have built, they're issuing tokens as a reward to people who use their what they have built. So one of the best examples was when David Hoffman from Bankless earlier today during the panel gave the analogy that it's kind of like when you ride on Uber, when you ride on Uber, or Grab, and they give you cashbacks, right? To incentivize you for rewarding you for using their product or service. Yield farming basically is a phenomena that's happening where people are riding Uber and Grab for the sake, of earning these rewards even more and more. So it's going through an incentivized phase right now. It may or may not last, forever. This is something to know. But one of the other things, that you would have gained by now is that this space, has a lot of opportunity for getting remote work and generating an alternative source of income. Because as you can see from, projects like Keep, like Loopring, like Balancer, they have, they invite, there's a lot of opportunity in Southeast Asia for you to contribute, whether you're a technical or non-technical person. This is probably the best way, especially this time when there's so many, hardships around, people struggling, to generate income. One place that is booming with opportunity is the crypto/blockchain/DeFi space. So hence, we encourage you, to watch, the past, 7 videos, digest it completely, so that you can familiarize yourself, get yourself more informed, educated, so that you can capture opportunities in this space. This is the reason, why DeFi has, this is today's article. DeFi continues to carry a lot of traction. However, we do want to emphasize that a lot of this is still early days. A lot of experiments, can fail. And thus, disclaimer, none of the content that is shared throughout Southeast Asia DeFi Week should be treated as a financial and investment advice. The reason why we do this, it's very simple. DeFi is trending, it's attracting a lot of money. When something attracts a lot of money, it tends to also have the other effect where bad actors or fraudulent actors, will come and try to scam you of your money. We create this so that you can get the best kind of information possible in one single place. And that's why we do what we do. So we are about to go into the main content, but do stay to the end, for instruction on how to win prizes. There's a survey. I need to update this. We'll show you how to go and win. There's basically really, really cool maker swag kits, that you can potentially win, and they'll be sent to your doorstep, and we'll share with you the instructions after this, so still stay till the end. Today we're going to be talking about Maker. Now, as you remember, Maker is we invited Maker to speak for the first time, okay, in first Southeast Asia DeFi week, okay, in back in June 1st, which seems like a long time ago. Anyways, what is Maker for those, okay, who are listening in for the first time? Maker is one of the most important projects in the DeFi space because what they introduced was a way to create a decentralized currency that is stable. That so what people it was the first, okay, that allowed users to basically deposit, okay, ETH, okay, or any kind of asset, okay, in their list, okay, of something. You can deposit an asset and you can withdraw a loan, okay, in a stable coin called DAI. Each DAI has a software towards $1, and this unlocked a lot of and solved a lot of problems within the cryptocurrency space because a lot of people were saying that how can I transact, okay, with something that is highly volatile, not stable. DAI, okay, was one of those solutions. And DAI has a lot of other new features, okay, that was created along the way, like the DAI savings rate. With the DAI, you can earn interest on your DAI, and and now there are a lot of apps, okay, that you can integrate with, which you have learned, okay, a lot in the last 7 days. You can deposit DAI and compound, earn interest on that. Deposit DAI on, uh, uh, you can deposit DAI in Aave. You can deposit DAI in Curve, okay, earn interest on that, do a little bit of yield farming, so many things. One thing, okay, that also that's interesting about Maker is that it is run in a decentralized manner. That is why, okay, today you will soon learn, okay, that Maker has moved, okay, from the Maker Foundation, okay, into a DAO called MakerDAO. And one, okay, that very, very interesting milestone that happened, seems like a long time ago, but it's quite recent. Okay, one of the first projects to hit a $1 billion milestone in the DeFi space, MakerDAO. So for those, okay, who want, okay, to learn, okay, the basics, okay, of MakerDAO, like how does it work? How do I, put my Ether, okay, and get a stablecoin loan? You can learn that, okay, from the first video, okay, that was covered back in June 1st. And here's the link, bit.ly/cdefiweek_day1. Take you to that video. It's about 45 minutes long. Okay, it'll cover the basics for you. Today, we are doing something really special. We're going to talk about decentralized governance. We're going to look at behind the scenes on what actually happens, okay, in MakerDAO, okay, and we have Charles St. Louis, okay, from MakerDAO, who is a decentralized governance speaker, to be with us today. Charles, thank you so much, okay, for being part of Southeast Asia DeFi Week.
Thank you for inviting me. I'm really excited.
So, first question, Charles, okay, can you tell us a little bit, okay, about how you got, okay, into this crazy world called DeFi?
That's a good question. Well, I think I originally got into the industry around 4 years ago, and I actually started in private blockchain, so Hyperledger, working with a bank. And I was really kind of intrigued by the whole technology, and I immediately saw the limitations of the private blockchain, so I jumped into Ethereum. And then skipping over a couple of years, I joined Maker around a year and a half, working as a technical consultant on the engineering team. And just back in April, we really started, well, actually, back in June, we started working on the decentralized governance movements. So I've been really focusing on all the pillars that we need in place to make MakerDAO a self-sustainable DAO.
Okay, so wow, when you said June, okay, that doesn't seem like a long time ago, but in crypto years, that kind of seemed like a long time ago. Can the last time, okay, that Jocelyn, okay, shared with us the state of MakerDAO was back in June 1st. Okay, can you give us a quick update? How is MakerDAO doing? Okay, since the last time we heard from Maker.
Really well. Would I be able to share my presentation now, or?
Yep, sure. There we
Perfect.
go.
Okay. Yeah, so there's been a lot of exciting things happening. One, I mean, back in November, we launched multi-collateral DAI, and since then, we've been really focusing on making the MakerDAO self-sustainable in the long run. So this presentation will go over a bit of an introduction to Maker, just to recap it, but also talk about what the pillars are we need to put in place for MakerDAO to become self-sustainable in the long run. So the agenda for this short presentation is, like I mentioned, just a short introduction to Maker. I'm going to go over the self-sustaining MakerDAO initiative, which we launched back in April, and talk about the core pillars of the self-sustainable DAO. So I'll give a little teaser, but they are Maker improvement proposals, so a framework to propose changes to both the Maker protocol and governance, elect to pay contributors, aka a decentralized workforce, and lastly, vote delegation. So you can think of it as protocol politicians in a way. And then I'll talk a bit about our next steps over the next couple months on what we plan to do. So as Jason mentioned, MakerDAO is a decentralized governance organization that's dedicated to bringing financial stability and transparency to the world economy. Now, it wouldn't be possible without the Maker protocol. So what is the Maker protocol? Well, it's a smart contract system that backs and stabilizes the value of DAI, where DAI is a collateral-backed stablecoin that is soft pegged to the US dollar. An additional component to the system is MKR, which is a token that is used for governance and therefore maintaining the Maker protocol. As you can see on the right, it's a pretty wild diagram, but this is exactly the architecture of the Maker protocol. As you can see, it's quite modularized, and each component interacts with each other in a different way. However, I'm not going to go into the details of that in this presentation. The next key component of the Maker ecosystem is Maker governance, which I'll be really focusing on today. So in general, MakerDAO is governed by MKR holders, and they decide on how the system will evolve over time. Maker's governance system is actually one of the oldest on-chain voting systems to date, where every token locked in a voting contract equals one vote. In terms of other ways to gauge sentiment from the community and push things forward, we have a variety of signaling tools, such as discussion channels, community calls for both community and governance and risk. We have unofficial forums with forum polls to push things through governance. And lastly, we have on-chain voting. So we have governance polls and executive votes. Governance polls are for gauging sentiment and pushing things forward, whereas executive votes are for implementing things. So once that vote passes, if a change is included to make it to the protocol, it would then get implemented once that vote passes after a short period of time. So this is an ecosystem overview I like to show. As you can see, there's three main domains. You have the maintainers, the governors, and the users, and they all revolve around the Maker protocol. So the maintainers are the people who build the protocol and maintain it, obviously. We have oracles who provide prices and price feeds, and then the keepers who help operate the auction system that we have when vaults get liquidated and the debt needs to be covered. And then we have our users, which are DAI holders and vault owners. And lastly, what we're going to be talking more about today is the governors. So the MKR holders and the risk teams who help maintain the state of the peg and make critical decisions for how the protocol can evolve. So now I'm going to talk about the self-sustaining MakerDAO initiative, something that has been really exciting over the past couple months. And in short, it's just a way of enabling the community to embrace its role in governing the Maker protocol in the long run. So why do we need to make the DAO self-sustainable? Well, to start, the Maker Foundation plans to dissolve, and decentralization of Maker has always been a core principle since back in 2018. And as I mentioned earlier, we've already delivered multi-collateral DAI and have onboarded new collaterals on our constant cadence over the past couple months. So it's time to accelerate this decentralization movement. We can't just transition completely over because we need to give the community members their chance to run the DAO themselves before we pass it over. So in order to achieve this self-sustainability, we need this new generation of core governance and independent contributors. And of course, Maker Foundation has a finite runway and will inevitably run out of capital. So it's important to set the pieces in place today to give, like I said, the practical experience to the community members to take on these roles in the future DAO. So the focus of this initiative is to employ long-run governance models. So MakerDAO must be able to cover all the potential risks and take advantage of the important opportunities, all without the foundation. Now, this requires governance processes that are well-defined and clearly understood by the community, as well as polished technology, documentation, a system for the practical knowledge share from the current contributors to the new contributors, and so on. And we need to start this process while there's plenty of time for the community to get elected through governance, figure out the roles, look at the domain teams, and so on. So the foundation of the self-sustainable MakerDAO roadmap is, like I mentioned earlier in the teaser, we have elected paid contributors, so the decentralized workforce that will work on areas such as smart contract development, risk analysis, Oracle development, and many more down the line, such as marketing, how to manage the social media and hosted apps space. And we have maker improvement proposals, which is that framework for employing change and proposing it to governance to improve the protocol and governance itself. And lastly, we have the protocol politicians, the vote delegates, who will be the people who can, where people delegate their votes to them and they trust their authority, and then they'll vote on it on their behalf. So we've already started with maker improvement proposals. You can think of it as a decentralized alternative for foundation operations. So it's responsible for the change management of the protocol, which includes guarding security standards, quality assurance vetted by the entire community. And it's quite similar to the other improvement proposal frameworks that are existing today, such as Ethereum's, Bitcoin's, and Python's, which Python was the original one. However, those improvement proposal frameworks are very technical oriented. So it's only really for employing technical changes, whereas Maker's MIPs are tailored to specific governance needs with a socioeconomic twist. So MIPs are in progress, like I mentioned. The first improvement proposal ratification vote was back in May, and ultimately making the MIP framework fully operational and in use. And what that contained was a core governance framework, which outlines key governance structures and lays the backbone for long-term governance, such as a regular governance cycle. So a monthly cycle with the same processes over the course of the month for votes and meetings, and a collateral onboarding framework for adding new collateral types. So a complete framework for allowing people to propose collateral types to be added, votes to go up to see what the community sentiment is towards it, the domain teams taking those, doing the work, and then proposing it to the governance cycle. So all of that is in place already, and it's been going really well. So the decentralized workforce, we need this because security maintenance and long-run development of the protocol requires this, especially when the foundation will be dissolved. And you need humans, not just code, are necessary to participate in the risk management, collateral onboarding, stability processes, and so on of the protocol. And I think the coolest part about elected paid contributors is the fact that they are elected through governance, paid by the protocol, through governance as well, but they'll operate with a radically transparent and horizontal form of organization, ultimately collaborating through the ultimate goal of keeping the peg stable and making the DAO run in the long run. So the protocol politicians, why are they important? Well, delegates are important because the smaller MKR holders who today feel like they may not have a bigger impact compared to the bigger holders will be able to delegate their vote and actually relate to someone who has similar ideas of what are good proposals, and they'll vote on their behalf. So it really evens out the proportion of voting and increases voter participation ultimately as well. In general, these vote delegates serve as a bridge between voting and public discussion. So bringing governance to a healthy state where decisions are made on a publicly available sentiment. And they're really critical for ensuring the success of managing elected paid contributors and MIPs as well. So what are our next steps in terms of gradual decentralization? Well, as I mentioned earlier, we already have maker improvement proposals in progress, but we don't have EPCs and vote delegates yet. So the conversations have been happening actively on our forums, but we're still crafting the solution to do that. So while it's tempting to get these two solutions perfect the first time around, the foundation believes it's better for the community to iterate on it over time, which is one of the key things of our improvement proposal framework, is that it can be iterated over time. Once a proposal is up there, it's not permanent. You can propose amendments and you can do these review processes to improve the processes of governance and the protocol. And lastly, I want to emphasize that we need the core community members to gain that practical experience in running the DAO. And we're starting to see people get more involved and starting to consider proposing themselves as a domain contributor or a MIP editor or a governance facilitator and those kind of things. So I'm not sure if you'll be able to get this presentation after this AMA, but I provided a list of what you can do to keep up with the governance at Maker, which includes a weekly update by me. We have a channel. We have calls each week. Our blog post goes out each month. And of course, you can always reach out to me as well to ask me any questions. So that is the end of the presentation. I guess we can jump into the questions now, Jason.
All right. Okay. So that was a very interesting, and very clear, concise, update, of what's happening. My first takeaway that I got from your sharing today is that MakerDAO is in the transitioning of becoming a DAO. Okay, it's a gradual process. It's not a instant. Okay, we are DAO, we're decentralized. That's the first thing that I took away. Is that correct?
Well, yeah. So, as I mentioned earlier, one of the core principles of Maker is this gradual decentralization methodology of slowly working towards complete decentralization. So, as we saw, I think back in December, or maybe a little later, we transferred over the control of MKR, the multi-sig, sorry.
Yeah.
So we've been putting these things in place, and Maker improvement proposals literally allows anyone from the community to propose a change, and then the MKR holders will vote on that. So there's no control from the foundation from that perspective. You can think of the foundation as a really big community member.
Right. Okay. Super, super interesting. So, so my second question would be, how has it been going? So far, because when here's my experience, with DAOs. Very often, over the last 12 months, I've participated in a number of DAOs, and one of the things that I observe is that how quickly a DAO can fail, because when you participate in a DAO, it's so difficult, to very often these discussions can become noisy, village kind of like, did you guys mean these kind of like really rowdy, but how has it been in MakerDAO?
Yeah, I think one of maybe the reasons for some of the most recent DAOs not essentially continuing over a long period of time is that you have to have a really clear vision on what the goals are for the DAO and really communicate it across the community. So, DAOs in general are one of the best tools we have today for social coordination. And it's important to have a vision to socially coordinate around. So that's probably my biggest comment towards that. There are many different types of DAOs. It's used pretty broadly. Not all DAOs are self-sustainable or have the goal of doing that. Some are used for giving grants, for example, like MaKERDAO, where it's a smaller, kind of more private group of people who help fund the ecosystem, and it's very small and coordinated. But then you have really big DAOs which revolve around a bigger vision.
So it's not easy. It's really ambitious. Of what you guys are trying to do. Can I ask what has worked well? What have you learned? In the last I don't know, what would be a good time frame? Is there something particular that you have learned in the last 6 months that you wish that you knew today?
Yeah, so we're lucky that the Maker improvement proposal framework is really based on the core idea of iterative improvements. So as I mentioned before, if you were to put a solution out there and try to perfect it right away, it's kind of like the waterfall approach versus agile. So if you take a lot of time to do something and you release it and there's a lot of problems, it's a lot harder to fix. Whereas if
Right.
you release it with a core framework and a vision,
Mm-hmm.
and you can iterate on it over time, that's really the way to go about it, especially in the blockchain space. Um,
Mm-hmm.
so, I mean, in summary, what we've learned is that there's always room for improvement, and
Mm-hmm.
uh, you can't necessarily just trust the fact that something's going to be perfect for the first time.
Got it. So, can you roughly describe, okay, so because there's a few people, okay, who actually wrote to me and they said that, Jason, what if I'm keen, okay, to uh, like propose, okay, like for example, a wrap dash, okay, to be on, okay, Maker, or a wrap Hive token, okay, to be on Maker. How would you describe, okay, that process to be like?
Yeah, so that is defined in our collateral onboarding framework that we ratified for the Maker and proposal.
Mm-hmm.
I can potentially put it in the chat later as reference, but in short, the process goes that you'd go to our forums and fill out these questions related to the token at hand. I
Mm-hmm.
think it's about 12 questions. You'd post it to the forums, and after 2 weeks, it would go up for a community sentiment vote. It's called Community Greenlight Poll. So this is where the community votes on their thoughts behind adding this as a token to the Maker protocol in the future. And the results of that poll are taken by the domain teams. So that's the risk team, the oracles team, and the smart contracts team, who have all been ratified through governance. They take these questions, they do analysis, and they do their work requirements, and um, then they'll actually create a proposal that proposes to add it to the protocol with the work included in it. So then it will go through the governance cycle and then ultimately get ratified. Now that sounds like a long process with a lot of steps, but it's really key for the security and risk um, considerations of onboarding collateral.
I agree. What's important, okay, what I think that's very interesting and differentiated that Maker has is very clear, defined, okay, documentation and processes in order to coordinate, okay, and communicate, okay, what needs to be done in order to get things done. Now, we have one question, okay, from the community. I think that this would, if we answer this question, if you answer this question, okay, we can close off the topic on collateral. His question is, what else can we use as collateral, okay, moving forward? I think you roughly, okay, answered that, but maybe just to hammer it home, okay, can you answer this question, please?
Yeah. So, well, right now we have seen a lot of ERC20 tokens come in.
Mm-hmm.
As you mentioned about wrapped assets, we have wrapped Bitcoin that was recently onboarded as well. Right now, we're really looking at the possibility, and there's been a lot of conversations and community proposed solutions for onboarding real world assets to the protocol. So projects such as mortgage lending, real estate, and even supply chain management type tokens are all being considered for onboarding. Now, we need to create some processes to enable this through Maker and proposals, but it's definitely a future term possibility in terms of collateral types. And to answer the second question, COVID has not affected the operations or development of Maker. It has affected the in-person events though, so that's a bummer, but nothing serious.
All right. Okay, coming back, okay, to governance. I have a question. What do you consider as one of the most serious threats, okay, to the governance of MakerDAO right now?
Hmm.
I'm sorry if it's a really tough question,
No,
but basically,
yeah, sorry.
what could go wrong? What could go wrong?
Well, I think the main consideration is it's not necessarily specific to Maker, but it's mostly the same threats that you'd see for governance problems throughout Ethereum and DeFi. And the main ones that come to mind are voter fatigue and voter apathy.
Mm,
And what I mean by that is low participation allows poorly thought out or malicious proposals to slip through governance. And so it's really important to keep into consideration experimentation with voting incentives and vote delegation, like I mentioned earlier.
mm-hmm, mm-hmm.
And with respect to governance, again, I think the pace of governance is also an important consideration. So if governance is a slow process in a critical time, like back in March that we saw,
Yeah.
governance might fail to react in time. Now, with Maker, we have a monthly long governance cycle, which is typically used for bigger proposals, features for the protocol, or collateral onboarding. But we recently implemented a weekly cycle, which allows for more expedited processes, such as serious threats or things like that as well. So that's an important aspect that we just added to kind of solve for the pace of governance.
You mentioned, okay, March 15, or was it March 16? I think that was what a lot of people in DeFi called it Black Thursday.
Yeah.
Can you elaborate, okay, for the community, like what is the one key learning, okay, that that you have learned, okay, from that that incident?
It's hard to pick one, but I think, like I mentioned, the pace of governance is really important. It really goes to show how active our community was at the time to react in such a critical manner. I think it also, one thing that's also pretty interesting is the liquidity incentive structure around these protocols, not just with Maker, but in this case, it really goes about increasing documentation and accessibility for our keepers framework, which are basically bidders in our auction systems. So making it more available for ecosystem people to experiment with and also learn was definitely a key takeaway from my perspective, at least.
So coming back, okay, to liquidity mining and governance tokens, what do you consider are the plus points of having a buy back and burn model for the Maker token compared to a pure governance token like Comp?
Oh.
So let me
Oh, I
repeat
thought
the
it was
question.
muted. Sorry. No, I can answer the question.
Okay.
I just was muted. My mic is a little weird. So yeah, I mean, MKR is a governance token, so it uses this buyback and burn model depending on the state of the system, of course. That's actually one of our auctions or two of our auctions that do that. But some of the advantages to having a buyback and burn model is that MKR holders really have more skin in the game, which incentivizes better decisions. So a skin in the game token drives higher valuation for itself and decreases the potential of a future governance attack. And lastly, with the MKR debt auctions, so basically auctioning off MKR for surplus, they're very critical to our system's economics. So without MKR in that model, there's no backstop for DAI becoming under collateralized, and this ultimately makes the system a lot stronger. Now with Comp, it's simply a governance token. Now it is cool that it has vote delegation built into it, but it doesn't really have that model that really incentivizes better decisions and has that skin in the game kind of approach.
Agree. Okay. Last week, one of the best things I did was actually to save Yam.
Oh, you voted?
I did. Was that I delegated my vote. Now, so this is what happened. Okay. Now there's a very important rule that I have, which is that I need to understand what I'm getting myself into before I participate in any of it. However, I just found Yam like really, really interesting. Okay, my friend from Australia posted a video about what Amperforth is. I read up on Amperforth, I read on Yam, and I just thought to myself, the best way to actually learn something is to have a skin in the game in it. So what I did was I had some idle Aave tokens, staked my Aave tokens, started farming Yam, right? And I learned so much, okay, from it. I totally understand what you mean, okay, by having a skin in the game, okay, is so much more meaningful. Now, I want to ask you the next question, since we talked about that. We must talk about other governance tokens. One today, okay, crypto Twitter going crazy because Wi-Fi token literally clocked in, I think, 10,000 or 11,000. It could be a bug. could be a bug, okay, in our computer screens. What is this magic? What's this sorcery that's happening? But what do you think, okay, of governance tokens like Wi-Fi?
Yeah. Well, in terms of yield farming and all those types of models, in my personal opinion, oh, sorry, I have a dry throat. I'm just gonna have some water. Yeah, so in my personal opinion, I don't think those types of models are sustainable in the long run. So the high interest rates, the problem with that is that rates are paid by the protocol issued rewards, and they can't just keep printing tokens over time. So once the printing stops, you'll see those rates go down, and these models only really give users temporary advantages for early adopters. So they won't last when other people from outside the DeFi ecosystem come around. Now, I do think these experiments are overall beneficial to DeFi, of course. I think the Wi-Fi supply distribution was very interesting, and the based one as well, which was even more fair. And as I mentioned before, the comp token has some pretty cool built-in vote delegation. But one thing is really clear to me after seeing the recent farming projects and these token models, and it's that we really need to keep in mind that it's really crucial to have built-in incentivization for liquidity. So making liquidity really available in these models is important. So, I mean, in summary, I do have to note that my favorite parts about this industry are the fact that we never before had the opportunity to experiment with governance economics models this fast with real people. So as an Ethereum, I'm always encouraging more experiments, and I'm really excited about this current trend coming up.
In the case of Wi-Fi tokens, are they printing more Wi-Fi governance tokens? I thought that, that's it. Okay, 30,000 fixed limit.
Oh, I'm actually not quite sure about those details. I was more referring to the whole farming models rather than the governance.
Right. Okay. You're talking about in general, okay, these governance tokens being issued and etc. etc.
Yeah. Sorry.
So I'd like to point out and maybe give emphasis, okay, to something that Andre Cronje himself, okay, who created the Y protocol, said that there is a huge conflict, okay, right now between people who are actually being incentivized to provide liquidity, okay, because they're putting their money there and they're farming token, and there are people, okay, who are there's a huge conflict with those people who basically buy the tokens because they are looking for high capital gains. So huge conflict between the two. Just need to be aware, okay, that there's these kinds of dynamic, okay, happening when you're looking into these kind of DeFi tokens. So we have a question from Steven from Malaysia. He asked the question, just wondering, can Maker community push through a solution on helping with the gas fees? Because that is something that clearly is a barrier right now. Would you agree?
Yeah, it's definitely one of the considerations we have in mind with respect to increasing voter participation.
Yeah.
Over the past couple months, we've been really looking at gasless transactions. So, sorry, my voice is cracking up a little, but we're looking at gasless transactions, layer 2 solutions for eliminating the gas fees when participating in votes. Now, there's different ways you could do it, and I do want to note that this is definitely just experimentation and looking at how we can increase voter participation in different ways, but allowing people to vote for free at least once on each proposal would be interesting. If they want to re-vote in the same manner, they'd have to pay, but definitely incentivizing voter participation. This is a first step in that process.
Cool. I think that sounds really, really cool because a lot of DAOs are kind of like stuck right now because, yeah, you're right. Voter apathy, voter fatigue, and it costs money to vote. If anything, young people don't like to do is that they don't like to vote, okay, and they don't like to pay to vote.
Yeah.
So one of the things, okay, that it seems right now that's going to a trend is that more and more projects, okay, are dissolving their foundations and moving, okay, to the DAO model. Now, do you see a lot of other projects following suit? If yes, why? If not, if no, why?
Yeah, that's a great question. So yeah, I do see a lot of projects doing this over the next few years. But I mean, it also depends on their core principles and their ultimate vision. So maybe that's not complete decentralization. But for Maker, gradual decentralization has been the core principle, as I mentioned before. So it's really important for us to do that. And I'm sure many foundations out there probably have finite runways, and they'll inevitably run out of capital. So decentralizing the protocol to their most active participants of their community is definitely one of the ways you can go. And it's really interesting because in blockchain, typically in the startup world, you have a couple options as a startup founder. You can either be acquired or exit. You can go public, and those are really the only options. Whereas in blockchain, because of DAOs, you have the ability to pass over the control of operations to your most valued customers. And you know they align with your vision. So you can trust them, and with the right tools and processes to transfer knowledge, you can literally have your community run the DAO in the long run, which is incredible in my mind. So yeah, I mean, it really breaks down to these protocols or DAOs wanting to do that. And yeah, that's pretty much it.
Cool. Thank you so much, okay, for sharing so much about DAO governance, especially right now, okay, being Maker being one of the oldest, okay, that is actually front runners, okay. There's a lot that we can actually learn from you. So what you have shared today is like extremely invaluable. Young asked a question, okay, that at times of market volatility, does the DAI risk, okay, losing its peg, okay, due to DAI liquidity issue?
So what can MakerDAO do to safeguard token holder interest? Well, I mean, in terms of the peg issue, there's a couple ways in which you can help it in the long run, and that is one, diversifying the collateral portfolio, so continuing with collateral onboarding, and having the risk teams set the parameters for those to make sure that the peg is stable. So having quick interacting governance participants, making sure that the keeper system is working efficiently and that there's active keepers in the ecosystem. And I didn't really describe what keepers were before, but basically they're automated bidders that participate in our 3 auction system. Now, the most common auction system are the flip auctions, so you can call them collateral auctions, in which when a vault position gets liquidated, the keeper would participate in that auction for the debt of that liquidated vault. So the collateral would go up for auction in order to cover the debt caused by the liquidation of the vault. And once it's covered, the user would get that original collateral back minus the debt and the interest rate, called the stability fee. So just for context, but anyway, collateral onboarding, active participation governance, and keepers all help maintain the peg.
Cool. What's that? That was really concise summary. 2 more questions, okay, because we only like got 5 minutes, okay, before we end the session. Would like to get your thoughts, okay. Are you happy with the state of DeFi right now, okay, or is there something, okay, that you wish, okay, things to be better?
I'm pretty excited about DeFi right now. I mean, I'm a really big fan of experimentation of economic and governance models. So seeing these past few weeks just blow by, it's been really eye-opening and exciting. At the same time, it's also bringing back a lot of users who left after 2017 and 2018 back to the ecosystem. And hopefully it's not just for the gains, but and in many ways, I want to really work hard to maintain that user base and keep them here this time, and learn the lessons from these experimentations, and work with the protocol to think about what we can do in the future. So I'm really excited.
Hashtag stay in crypto. Okay, last question for you. This one is for you. Okay, right now we have people listening from all parts of Southeast Asia, Philippines, Vietnam, Thailand, Indonesia, Singapore, Malaysia. What can we do for you right now? Okay, what does MakerDAO need right now? What can we do for you?
That's a great question. I mean, as I mentioned before, governance participation is fantastic. Join our forums. I can send a link to you, or you can find it on our website as well. But the forums are this go-to place where we talk about governance, risk, oracles, development, maker improvement proposals, and it's just this massive, thriving community of people just trying to do the best for MakerDAO. So collateral onboarding, what should we do about this incident? What should we do about this opportunity? And if you're really interested in Maker, join us on the forums and start participating. Participate in governance. We were doing this really cool experiment on our forums with a company called SourceCred. So it's incentivizing participation in the forums. So the more you participate by making posts, getting likes, commenting on people's posts, you earn DAI from your contributions.
Okay, where is this happening? Okay, what is the communication vehicle that MakerDAO where are the cool kids hanging?
Definitely in the forums, on our community calls, on our governance calls each Thursday. We post that on our Rocket Chat, which is similar to Slack. I'm not sure if everyone knows what Rocket Chat is.
Slack.
And it's Rocket Chat. It's similar to Slack.
Oh, okay. Is Rocket Chat similar to Slack? Okay.
Yeah.
Quick question: do people need to buy Maker tokens in order to be part of the DAO? Or is there a way that they can earn their way in?
So, like I mentioned before, the Maker ecosystem is really built upon an entire community, and MKR holders, the governors, are really only one portion of that, although they are definitely the people who make the final decisions on certain things. But as I mentioned, we're doing an experimentation with reputation. So if you participate in our forums, have good thoughts or support, and participate in active discussions, you can also earn DAI. So by earning DAI, that also makes you a part of the ecosystem as well. So I definitely encourage anyone interested in Maker to join our forums and start contributing there.
Okay, what I'm going to do after this, immediately after this session, is that I'm going to take the links that you shared earlier. I'm going to put it in the comment section so that people can join the community calls. Okay, Charles, it's been fantastic. I hope you enjoyed yourselves. I hope the people listening in right now, gain a lot of value by having a greater, more clearer insight as to what's happening behind the scenes, in MakerDAO, and how you can also participate, in the conversation in Maker, to make Maker even more robust, increase adoption, increase awareness. Thank you so much. Before we end the session, just want to give another shout out, to Charles. Thank you, Charles, for joining us. Want to give a shout out, to all the people who have joined us, in Southeast Asia DeFi Week. Robert Leshner from Compound, Stani Kuleshov from Aave, Instadap, we couldn't get Hayden Adams this time around in Uniswap. Give a shout out to Sylvester Lee, Carolyn Rakal from Keep, Kane Warwick, from Synthetics, Michael Egroff from Curve, Fernando Martinelli from Balancer, Sergey and Anton from 1 Inch, Matt from Loopring, Kosala from Mew, Yevgeny from Zeron, and Charles from Maker, for making Southeast Asia DeFi Week so fantastic. Thank you to Asia Blockchain Center for giving us this incredible venue and really, really good facility, to shoot the live stream. Thank you to all our partners all across Southeast Asia. You know who you are. Shall we do this again? All right. Let us know in the comment section. We have so much more we haven't covered this time around. Maybe next time, we can have REN protocol, we can have UMA, Amperforth, a particular vegetable token, DIA token, BAN protocol, YN. Let us know in the comments who you'd like to know. We are at the end, please fill in the global survey. Okay, scan this QR code right now. We're going to leave it on for another minute. Okay, at the end of it, input your email address. Okay, 10 lucky winners will win massive okay amount of really cool maker swag. Okay, they'll get in touch with you if you win. All right, get your postal address and then mail it directly to your doorstep. With that, okay, Charles, it's been fantastic. Thank you so much again, everybody. Good night and see you next time.
Thanks for having me.